Time for our 360 round where we break down Salesforce after its latest results. For that, I want to bring in our panel to discuss its earnings. We've got Keith Kirkpatrick, research lead at Futurum Group, and Nick Raich, CEO of the Earnings Scout. Thank you both for joining us today. Nick, I want to get your reaction first. Look, it did beat expectations. It gave higher guidance than it previously gave. Adjusted EPS for anyone who's not caught up, $2.58 a share. Revenue was $9.83 billion. That's better than expected. Expecting $11.27 to $11.33 in adjusted earnings per share for the year, $41 to $41.3 billion in revenue for the fiscal year. Nick, what's your reaction to its results?
Yeah, we think solid results. The earnings expectations are actually improving on a rate of change basis. And, the stock's down because of, future soft growth expectations. And we think a lot of the bad news is being priced into stocks. And it's more about sentiment than it is the actual business actually deteriorating faster than what the street expects. So we think a lot of bad news is in this price. And as you said, it beat on the top line, beat on the bottom line, and gave good guidance. So these are stocks that we'd be more optimistic about, particularly as it's trading at a cheaper price.
Keith, I'm curious to know, beyond the reaction to earnings, there's been a lot of questions, I guess, about this acquisition of Informatica, and some don't necessarily see it as a good thing. What are you seeing on that front?
I think that if we take a look at if there's been a knock on Salesforce, particularly around its agent force strategy, is that a lot of times when you think about Salesforce, you're thinking about front office workflows and that sort of thing. The acquisition of Informatica actually helps out by making data available across the enterprise. If you think about where a lot of critical data is held, it's in an ERP system. Informatica will actually be able to help because it gives sort of a strong data validation framework that allow organizations to pull in data from across the organization. To me, that really helps them execute on their agent force strategy of having agents that work across the entire organization and eventually beyond.
Nick, I'm curious to know your thoughts on this acquisition, especially because, I do see some different viewpoints. RBC thinks that this acquisition creates deal risk because of what's occurred with previous acquisitions and difficulty with regard to integrating, and they point out a mixed track record. A lot of people obviously have faith in the CEO, Mark Benioff, but what's your view about this acquisition?
Well, it's being criticized similar to what Salesforce acquisitions of Slack and Tableau were also criticized at their time of acquisition too. But now they're, key integral parts of the firm. So it's still early stages. It's again more sentiment and fear that it's not going to be integrated well. But the underlying data of all the customers and the relationships and how the businesses are going to use Salesforce going forward isn't going away. So we think, again, it's more sentiment and fear that the acquisition is not going to be integrated well. But we think over time that will prove that it will be.
Okay. And then, Keith, I'm curious to know overall how you felt about this most recent quarter and their guidance.
I think there are some really great signs there, particularly if you look at the organization. Mark Benioff has leaned into AI and AI agents probably more than any other CEO within the SaaS sector. We're starting to see positive results there. Just in my conversations with the company, some of the company's customers, they're starting to see real value from looking at AI agents and how they can actually be used to improve efficiency, improve productivity, all of the things that ultimately, if you look at what is ultimately driving the purchase of any kind of enterprise software, they want to generate a return on investment. And the only way that you're able to do that is by increasing those, moving those metrics, efficiency, productivity, and it isn't going to be by hiring more people these days. That's just not the way of the world.
Nick, I'm curious to know your thoughts on, the analyst community, when you think about the sell side, is actually largely bullish on Salesforce, but those who are in the more neutral camp or the less than bullish camp, the bearish camp it seems to be loud. What's your view on what needs to happen to turn things around in terms of especially how it's viewed for the growth drivers and then how you all see this acquisition?
Sure. Yeah. Well, Wall Street, when Wall Street says hold, they really mean sell because less than 6% of ratings on Wall Street are a sell because you still have conflicts of interest with sell side research departments and their investment banking arms. So those conflicts do exist. So when an analyst writes hold, that more or less means a sell. We think in terms of the acquisition that's taken place, a lot of the bad news is priced in the stock. This is a stock that's down almost 20% year to date. Peak to trough, it went down, lost a third of its value. So a lot of bad news is baked into this already. And for the stock price to go even lower from here, we need to see things get even worse. And we're not measuring that from the analyst earnings revisions. We don't care about their ratings, but their earnings revisions are actually improving again on a rate of change basis. And that's where we're looking at and going, hey, when a stock's pricing in all the bad news and all kind of possible bad news about it, but we think there's nowhere for it to go but up at this point because the earnings trends are actually improving.
Okay, so maybe we'll get off the mat at some point. That's Nick Raich of the Earnings Scout and Keith Kirkpatrick of the Futurum Group. Thank you both.